Hey, I just wanted to apologize for not posting on Thursday. I was just too sick to post, so I do apologize for that. So I want to apologize for my raspy voice. I've been sick and still recovering, so I do apologize for my raspy voice. S&P just had the worst week since 2023. NASDAQ, the worst week since 2022. On Friday, we got the jobs report, very negative reaction to it. Dow was down 410 points, down 1%. S&P was down 1.73%, down 90, almost 95 points. NASDAQ down 2.55%, 436 points. That's the NASDAQ composite. The Russell down nearly 2%, 1.91%, down almost 41 points. The VIX jumped up by 12.5%, nearly 12.5% to 22.38, an increase of 2.48. Again, I want to continue to point out, back up here, I was warning you, we were advancing on very, very light volume surrounding the July 4th holiday. Leading into it, after it, I talked about that at the time, and I told you to be watching the CPI report to see if we sold off with it. Start a reversal. Sometimes the inflation data marks tops and bottoms. It could be next week we get a bottom with the inflation data. Sometimes the inflation data mark turning points, either tops or bottoms. Over here it was a top. We sold off on NASDAQ 500 points. I told you to watch for a bounce off the 10-period moving average to the 78.6 Fibonacci. If that decline, we hit it right on the nose, and then the bottom fell out of NASDAQ. We dropped nearly 16%, 15.75%. to be exact. I told you, again, leading up to this, that, again, we are slamming into some major trend lines of resistance to be watching for a reversal. And I told you that I thought a very good chance we're going to peak right there. We did. Very next day, July 11th, I told you I thought this was the top. I thought we'd get a sell-off, eventually bottom out, and get a counter trend that would move back up to fill this gap. This is a 5-leg push lower, which I think it could be, a 5-leg push lower. We have an ABC corrective move under construction with A, with B, and maybe here around the 200 or just beyond the 200, and then with C coming back up here to the 20,400 area, where I think we'll fill the gap, we'll form a double top pattern on the NASDAQ, just like Bitcoin formed the double top pattern. As we sell off and rally back up to 50, look at the 50. It's flattened out here, and then now it's dropping, and the 200 still rising, and eventually they're going to close in on one another. And as we rally back up again and start dropping back down, we're going to see a death cross, just like what we've had with Bitcoin. I do believe that we have an ABC structure here. I've been talking about a deeper retracement or a more shallow retracement if we got an immediate bounce. But I told you that my signals turn bearish, momentum turns bearish, not this last week, but the week before that. And then this last short trading week, we saw the momentum signals on the S&P turn bearish and join NASDAQ. So again, this is what I think is going on. I think NASDAQ peaked back over here. I think we're in a larger topping process. So the bear market has really already started with NASDAQ. It's still in a topping process. I think S&P is still going to make a new high, and I think the Dow probably topped, not this past week here, but the week before that. He got a pretty good shot that the Dow is topped. No guarantee, but it's turning off of a 125-year trend line, as I've been talking about in my videos. So this is my blueprint for what I think is going to happen for NASDAQ. Again, I think we're going to see a bottom. That very well could be next week surrounding the inflation data. And then I think we get one big run-up, probably something very similar to this, and get a measured move, type of a move from this rebound right here. And then I think we complete a top, probably overthrowing the 20,400 area just a bit. And then at that time, I think the S&P will be making a new high. Probably see another divergence between the S&P and Bitcoin. And then I think the NASDAQ will have the bottom fall out on it. So that's what I think is happening. Now, before I leave this chart, I want to point a couple of things out. Again, we've got the 200 here directly below. We've got price dropping back below the 10 period, remaining, getting rejection at the 10 period, remaining below the 10 period. We'll need to get back above the 10 period for a bigger rebound back up. And then I want to point out the 10 is crossing back below the 20. The blue line there tried to get above it here, but then now it's crossing back below it. And the 10 and 20 are now back below the 50, and the 50 is pointing down. So again, likely going to bottom out here somewhere around the 200 period moving average again. Chance we see that with the inflation data that we're going to get next week. We're going to probably see that give us a rally, be the cool inflation data. The market celebrates and says, oh, it's under control. The Fed can go ahead and cut rates. And this, in all likelihood, one final rally back up, complete the topping process, and probably the S&P will make a new high. So I'm going to be looking for a possible bottom surrounding the 200 period here on NASDAQ, possibly going into next week. And then I'll be watching to see if my signals turn back to bullish. My signals are bearish at this time. They've been bearish since the previous week. And again, S&P turned bearish this past Tuesday, I should say. Monday earlier, it's Tuesday, this short trading week. Please support the channel with the link directly below that allows me to be able to provide you this information. If you could take a moment to do that, I would really, really appreciate it. Follow the link below. It'll take you to a secured site. You can donate any amount you want. Take a moment to help out. I would really, really be thankful. I don't have any sponsors, just a direct relationship with you because I don't want to sell you stuff. But it would really be encouraging to hear from you. So if you could take the time to do that, I would really, really appreciate it. Check back on Sunday morning, 7 a.m. Eastern Time. I'm going to be talking about some of my other signals. VIX that is now predicting bounce or bottom. The Tuesday session, I'll talk more about the VIX. I'll be talking about signals like right here with the S&P, a 4-hour chart. Again, it turned bearish right at the beginning of the week, remains bearish. And again, RSI in the negative region. Momentum in the trend for the swing move, bearish. When this turns back to bullish, we'll probably see the S&P move to a new high. But it's done an incredible job of marking the turning points here. And this week is no different. Again, it marked it right on Monday when we had the turn. We've seen momentum go back and forth as we formed this divergence here on the RSI. So I'll be talking about this signal and for the NASDAQ as well, and some of my other charts that I'm not showing you in this chart. So check back Monday morning, 7 a.m. Eastern Time. Again, told you a week and a half ago, momentum signals had flipped bearish. NASDAQ, we saw that happen at the beginning of this short trading week for the S&P 500 on Tuesday. Here on the 28th, as we were wrapping up August, we saw the signals begin to turn bearish for NASDAQ. And we dropped below the 10-period moving average, and the bar turned red, the cloud turned red. We've been selling off now towards the 200. Now seeing the awesome oscillator go negative, the MACD is rolling over and going into negative territory. We're now becoming oversold on the stochastic. So again, I think you're going to try to bottom around the 200-period moving average by next week. Now, Wednesday, before the market opens, we're going to get the CPI data. Thursday, we'll get the PPI data. Probably bottom surrounding the CPI data in all likelihood. To find a bottom at some point next week. That's what I think is likely going to be the case surrounding this area. Then I think you're going to go back up and you're going to get your counter trend on the NASDAQ. This is the NASDAQ daily chart. Going to move back up to fill the gap. And you're going to start the bear market in all likelihood. I think NASDAQ and S&P will diverge from one another. Now, my signals are bearish. I think they're probably going to turn back to bullish, and we're probably going to get a counter trend back up to fill the gap at the 20,400 area, overthrow that area, but probably this high over here is probably going to hold, which came in at 20,691. So I think we're going to peak somewhere between the 20,400 area and the 20,691 area. Somewhere between there, I think we will see a peak. And again, that's probably going to be going into a Fed pivot. And the way it's looking now, it might be that we peak shortly thereafter. And again, historically, at the last two bear markets, leading up to recession, we saw the Fed pivot. We saw a bounce of 3.5 weeks. Again, it doesn't have to be that way, but it could. And it could be very, very close or very, very similar. But I do think once we reach that 20,400 area and move just beyond it, I'd be looking for a top in the market at that point. The S&P 500 likely a new high and a lower high to be established on NASDAQ. Again, I think we'll see some kind of rebound in all likelihood. But now, again, let me be clear. My signals at this point remain bearish. I think it's likely a pullback to give us a higher low above this low right here. Now, the S&P 500, the oscillator and MACD have not moved negative, but we are becoming oversold here. So, again, I am going to be looking for a possible bottom surrounding the inflation data next week. But, again, I guess as the S&P is going to end up going and trying to make a new high, fill the gap back over here, which, again, when we gapped down, it was right at the top. That gap has not been filled, and we came back and we came to just under it, but we did not fill it. And that gap is probably going to get filled, and that's why I believe S&P is probably going to move to a new high, along with a few other reasons I've talked about. Nevertheless, S&P signals turned bearish there on Tuesday of the short trading week. Had a bad week, below the 50-period moving average. 10 still above the 20, and the 10 and 20 are still above the 50. But again, I think you're going to bottom out, and then I think you're going to rebound back up. So I think my signals will probably turn back to bullish, but my signals did turn bearish with momentum there on Tuesday for S&P, and on the 28th the previous week, a week and a half ago for the NASDAQ. I hope you hear what I'm saying. My signals are bearish. I told you when they turned. This week on P, this past week here, and the previous week I told you when the signals had turned with NASDAQ. I think they're going to turn back to bullish in all likelihood because of the topping process. Topping process takes its time. Because the market takes its time doing what it's going to do, then people begin to not believe that it will happen because the market takes its time doing what it's going to do. It's pretty fascinating. Now, NASDAQ tried to find support at the 20 period. I talked about that at the time, but my signals had turned bearish on Tuesday. We fell right through the 20 period after that, and again, now we're taking out the momentum cloud. You got to get back above the momentum cloud, back above the 10 period moving average. The rebound momentum is now bearish on S&P. I'll be watching for a higher low scenario, possibly the 50% retracement or the 61.8 Fibonacci. If we can try to find a bottom at some point next week with the inflation data, I think there's probably a pretty good shot that happens. And I am of the opinion the S&P will fill the gap and come up here. We filled the gap at the intraday low of that bar, filled the gap over here, but we did not fill the gap on a closing basis. I think that's probably going to be the case. I think the S&P will probably push to a new high, and NASDAQ will probably fill that gap at 20,400 in all likelihood. But again, let me be clear, my signals have reverted back to bearish. For right now, they'd have to turn back to bullish. Guesses that will be the case, but right now my signals remain bearish. Again, we saw this little diversion set up on the RSI, and that's now taking the RSI back into the negative region. Just as this diversion gave us this sell-off that took us below the 50 level, we're now there. So again, we need to see that RSI push back above 50 if we're going to try. Sorry, I had a cough there. If we're going to try to bottom out, we'll see if we can get it higher low. S&P still has a possible 5-leg push higher here if we don't see an overlap. Again, I'm looking for a new high on the S&P in all likelihood. Probably see some kind of bottom ahead of the Fed pivot or with the Fed pivot. Give us a rally for a few weeks and it'll probably make a new high. So if we bottom out next week, I think we could start that rally, go for a couple of weeks after the Fed. But then I think, again, we're going to top. We're in a topping process. To believe the S&P is going to make a new high. I think the Dow has just peaked in all likelihood. Just basing that on some trend lines I'm looking at. I think NASDAQ already peaked on July 10th. Again, momentum rolled over. Saw the S&P turn down. It'll probably end up trying to form a divergence at some point and recycle back up here on the daily chart. S&P 500, again, we had that divergence over here, and it gave us nearly a 10% sell-off. We rebounded back up. We formed another divergence, but only corrected sideways initially. Now we're seeing the sell-off. But we're becoming oversold on the RSI. This is a 60-minute time frame. We filled this gap at 55.73. We filled this gap at 54.53. Other gaps down here, 53.45, 5200, and the 188. Again, I think you're going to probably get a higher low here at some point and rebound back up to go make a one final high. Wouldn't be surprised to see a bottom form around the inflation data next week, just ahead of it or with it. I'll show you this. All the bearish reversal of conditions on the daily chart. We saw the momentum flip as I showed you. We began to see NASDAQ 100 futures drop below the 200 period moving average here, the black line here on hourly chart. One thing I've been watching is 200 period moving average on the hourly chart. If we can get back above it or go lower towards the 200 on the daily and then bottom out and try to rebound back above it, then we can get the counter trend that I'm looking for, final counter trend move that will take us beyond this high and likely back to fill the gap at 20,000, the 20,400 area. I did that a little bit too high, but the 20,400 area or so. But it's not going to be perfect. But if it can get back above the 200 period at some point after trying to bottom out, maybe next week or Fed or whatever, then we can see a recovery. I think we're getting an ABC move on NASDAQ. So this is something I'm watching because, again, if you look at it up close, again, very, very clean drop below the 200 period here, acted as resistance as we lost, going back to the daily chart, as we lost that 10 period moving average in the daily time frame. We lost the 10 and then the bars flipped here. So again, if we do try to form a bottom next week or the week after with the Fed, whatever, I think we're going to see a rally. We could bottom out and begin to rally back up ahead of the Fed pivot, a bigger rally with the Fed pivot, but then still have the rally terminated shortly thereafter, as I've talked about. Now, I told you back up, we were getting the bearish engulfing here. I told you that momentum had reached extremes and was starting to roll over here. Watching to see if we confirm a higher low around the 200 here on the NASDAQ daily chart. I believe NASDAQ is going to form a double top that ends up giving us a lower high here. NASDAQ did fill the gap here at 18,543. I've been talking about these different gaps on NASDAQ, showing them to you mostly on the 60-minute chart. Here it is on the daily chart. We filled this gap over here at the 19,000 area. Now we're at 18,050 or 18,543. Another gap down over here, 17,870, and then again our 200 period. But I think we're going to try to bottom out around the 200 period, probably surrounding the inflation data, and then begin the rally back up. We'll get it with the Fed into the Fed pivot, and then probably beyond that. And it's a case we could see a peak in early October, very, very similar to what we saw happen in 2007. And again, I've shown you this chart, worked on it a long time. And again, it looks at the first rate cuts here in 2001 and 2007 and what happened. Again, we had already had the market peak in 2000 by the time we got the first rate cut in 2001, and we got a 3.5-week bounce, and then the market crashed. Same thing over here. We had a rate cut September 18th. That's the same date we're going to get it this September here, this month. And again, we had bottomed just before the rate cut and started to rally, but rallied about 3.5 weeks or so after, and we ended up peaking October 11th, 2007, and then got a really, really bad, and that was to a new high by the way, got a really, really bad crash of 20.5% into January. We just crashed into January for the next 4 months, October, November, December, January. A retracement there, but continued sharp decline. So again, this chart shows you what happens with the previous Fed pivots. Here's the Fed funds rate, as I've talked about. You get the Fed pivot. It's associated with the market crash, and it's associated with the coming recession. The Fed pivot does not cause the market to crash. The market is pricing in a recession just as the Fed is lowering rates, preparing for a recession. And again, the weaker jobs report today all but ensures that the Fed is going to cut in September. Back at the top, I talked to you about the head and shoulders formation that was developing to this bigger sell-off. Now we've had this rebound back up, but now we're getting a pullback. We'll probably see a higher low develop on NASDAQ we're becoming oversold again. And again, as I've said, we're filling this gap at 18,543. Looking at that 200 period on the daily chart really close. Again, NASDAQ's lost the 50 period. That's this green line right here. We've lost the 50. We're holding below it. On the 60-minute chart, still above the 200, but 50 is closing in on that 200. Bring parameters gone negative. If we can establish a higher low, you can move back up and get a measured move, as I've talked about, a measured move here that could again take us to the 20,400, or beyond that level, but not exceed this 20,000. It's a 20,000 high 600 area. So again, I'll be looking for this measured move pattern to likely form. My signals will probably turn back to bullish. NASDAQ 100 put in that lower high, taking a hit. So is Nvidia. Nvidia again, back towards a low here. Again, if it bottoms out ahead of a Fed pivot or with a Fed pivot, again, we can rally just beyond it by a couple weeks into early October, as we did 2007. So we'll be watching to see what happens here. And as I've been saying since early July, I think that Nvidia has already peaked on June 20th. I think NASDAQ peaked on July 10th. Semiconductors have peaked, but just wanted to show you again, we continue to get this sell-off. We're below the 50. We're below the 100 period moving average, so we'll be watching. You got support here at 97. We're above that in the low 100 area right now on Nvidia. Currently just under 103, and again, watching to see how this unfolds. If we take out this low, we still have the 200 period right here. Semiconductors, very similar to NASDAQ. Again, it has now filled the gap back over here from the June 16th gap lower, or I'm sorry, July 16th gap lower. Went back to the 200 period, rallied up, bounced off the 200, got rejection at the 50 period, filling some of these gaps, just like NASDAQ. But again, right at the 200 period right now, NASDAQ's just above it. We'll be watching to see if we come back and fill this gap after all is said and done. Again, if this is a 5-leg push down, I'll be looking for an A, B, and then on into a C, back towards the 254 area. Showing you the semiconductor ETF here, SMH and Nvidia. Again, this is what NASDAQ follows. We'll have the 10 and 20 getting a bearish, or still below the 50, and the 10 dropping back below the 20. Again, I think you'll see a short-term bottom established, and I think signals will likely revert back to bullish. We'll get a big rally, and everybody will say, oh, here it comes. It's a new bull market. Fed's going to cut, and the markets are going to go, and we're going to rally back up, and we're going to complete the top, and we're going to usher in the bear market. Conventional wisdom has been the market is going to really start going when we get the rate cuts. The rate cuts are already priced into the market. The recession is not priced into the market. What's about to be priced in once we get our next rally. Fed officials now echoing what Powell said at Jackson Hole. Powell had that speech, the time has come, the time has come. I've been warning you when the Fed was denying that they were going to cut rates. Remember, I told you we'd get a rate cut in September. We even have people casting doubt on that. But again, the jobs report that we just got is weakening, okay? And we know that the unemployment rate is predicting, based on the 3-month moving average, is predicting a recession. And we have all these Fed officials echoing what Powell said, Fed Williams. Appropriate time to lower rates. Governor Waller backs a rate cut at the September meeting, even open to a larger rate cut. But you have these guys all now backing. So we're going to have a September cut. I've been predicting this. Again, the herd is telling us, oh no, this is going to be so bullish. Be bullish for Bitcoin and crypto. It's going to be bullish for the stock market. The market is already priced in the cuts. That's what people are not looking at. The market is about to price in the recession. Now we got the jobs report, and again, more revisions down from previous reports. Surprise, surprise. Fake numbers we continue to get out of the Labor Department. We've had the S&P tumble Again, getting the worst week since 2023. NASDAQ, its worst weekly performance since 2022. So again, we're seeing distribution. NASDAQ's in a large topping process, so is the S&P. Likely going to get a rebound going into the Fed pivot, which means that the Fed starts lowering rates. We'll see a top. Probably NASDAQ and S&P will diverge from one another, and then we'll usher in the bear market. I think the sell-off we're getting right now is the bear market. It's not. It's the topping process. Now, NASDAQ, I think, has already started the bear market because I think it will set up a lower high. S&P, I believe, will set up a higher high. The Dow has likely peaked last week in all likelihood. Now, we saw momentum turn bearish the previous week on NASDAQ, and then we saw it happen on Monday on the S&P 500, and that produced this week's sell-off. I believe my signals are going to turn back to bullish, even though they've been bearish. P since Monday, NASDAQ since last week. Previous week, I'd say, I think they'll turn back to bullish, and I'll show you why. Just quickly, the jobs report. Thursday, we got the private payrolls coming in weaker, 99,000. This is the private payrolls. Big miss, supposed to come in at 140,000. And again, the 99,000 is below 111,000 that we previously had, which, if I recall, got revised lower. Now, we got the jobs report on Friday, and the market sold off sharply. And again, I talked about this earlier in the week, the possibility of a big sell-off surrounding the unemployment rate. Looking for that larger ABC move on the NASDAQ. Pay the chart in just a moment. It was expected to come in at 161,000, came in at 142,000. Unemployment rate held steady at 4.2%. Came in expected at 4.2% below the 4.3 previous reading. So it ticked down by 0.1%. Sold off with this. We had the month's reading. Surprise, surprise, it was revised down. I don't know who the Labor Department thinks they're fooling. I guess most people in the face of the planet don't pay attention after the initial report. They continue to overestimate the amount of jobs created and then quietly revise them down when they think nobody is looking. And this is probably because this happened over 2023 and over 2024 because we're moving into a political election. But these guys are just absolutely unbelievable. Count the amount of overestimating that they're doing. I told you previously for the year, in March of 2023 and March of 2024, they overestimated by 818,000 jobs. It's just incompetent. They're purposely doing it, which I believe they're purposely doing it. Absolutely incredible. You know, the annual revisions from March of 2023 to 2024 was 818,000, estimated by nearly 1 million jobs. We just had last month's number revised downward. Was at 114,000. It got revised down to 89,000, downward by 25,000 with the first revision. Look at the June reading. It came in at 206,000, over 200,000, revised down to 179,000, and then about a 40% haircut here down to 88,000, 118,000 jobs from 206 to 118,000, being revised down by 88,000. And so on and so forth, 56,000, 67,000, 7,000, 39,000, 97,000. We had an actual upward revision. Majority of it is revisions revised downward. Again, when we start seeing the job losses come, which they're coming, already be here, getting these bogus numbers out of the Labor Department. But again, I'm going to be able to put lipstick on a pig. Not going to be able to hide the negative numbers start showing up. My mind continues to be blown by the fake numbers, and they are fake numbers that we continue to get out of the Labor Department. I don't know who they think they're kidding. Absolutely incredible. But I wanted to show you this because not only did we get vision of last month's report, but we saw again June number, and prior to that the May number. We saw these numbers sharply revised downward to, again, losing 88,000 of the jobs previously reported and 56,000 and so on with the 67,000. Huge revisions. previous 3 months, and then this last month in July, 25,000. Huge, huge revision. Now, last month we had the jobs report trigger the SOM rule. The SOM rule is the 3-month moving average unemployment rate. Means when the 3-month moving average is 0.5% above the low from the last 12 months. Triggers the SOM rule. The SOM rule trigger predicts recessions. That's what we had last month. Still, even though we saw the unemployment rate slightly tick down again, the reading is still 0.57, and it doesn't matter. The signal has already triggered a recession, a coming recession. And again, they're telling us, oh no, we're going to have this soft landing out of the Fed and to enter into the new bull market. The rate cuts coming. The rate cuts have already been priced into the market. The recession is not. The recession's about to be priced into the market. But again, this is predicting a coming recession. The market will begin to price that in. The Fed is going to cut rates. It's associated, again, market tops and the coming recession. And next week, we're going to get the inflation data. Next week, we'll get the CPI data on Wednesday, September 11th. To come in at 0.2% on a month-over-month basis. The CPI per-year basis is expected to drop to 2.6, down from 2.7. That's the headline number. And we're going to get the core. The cores are also expected to be tame at 0.2% on a month-over-month basis. And then we're going to get the core CPI, which is expected to hold steady at 3.2%. It would get the producer price index, which is wholesale inflation. So we'll have that on Wednesday, the 11th. So we'll be watching that. Could find a bottom. We could find a bottom with the inflation data and try to rally into the Fed pivot and beyond the Fed pivot and in an overall topping process. And again, coming the week after that, September 18th, we're going to get the FOMC rate decision in Powell's press conference. And again, the Fed is, in my opinion, going to go ahead and cut rates. I've been saying this for a very, very long time. We see some kind of rebound in the market ahead of that or with that or shortly thereafter, and it's going to create a top. I do believe the S&P will move to a new all-time high. I think the NASDAQ will not. I think NASDAQ has already peaked. Some things to be aware of in the coming weeks ahead: the inflation data next week, the Fed meeting on September 18th. I think the market will peak and then probably either peak in late September or early October, sell off into the election. We get some kind of election rebound, but move well off of the highs, begin to usher in the bear market.